Are private real estate investment funds a good investment? In today's video, we're going to discuss the pros and cons of investing in a private real estate fund. In this episode, we're going to explore the alternative to wasting precious time and money trying to do it yourself with real estate investing, reveal the key concerns you should consider when investing in private real estate fund, discuss two crucial details every investor needs to consider when vetting a fund sponsor. We'll also dive into how real estate fund investing defies the law of physics, but not the laws of real estate. I'll show you how location is as important as ever, and as a bonus, I'll show you a few helpful hints when it comes to vetting for diversification and risk mitigation. Finally, I'll guide you on how to get started off on the right foot. Trying to flip houses or wholesale on your own can be great, fulfilling experience, but only if you have a very particular type of personality. You'll really need to embody a learning mindset, which requires a lot of patience, a tolerance for failure, and an ability to really roll with the punches. It takes a long time to scale your operations and truly start maximizing your profits. Overall, the rewards can be great, and there's nothing more fulfilling than doing it all yourself. If that sounds like you, I say then go for it. But if you want to maximize your profits and the amount of time that you have to spend doing things that you love outside of real estate, like hanging out with your family and pursuing your passions, then investing in a real estate fund is an amazing shortcut to achieving a life by design, and a fund offers several advantages over traditional investment methods. Some of these advantages include economies of scale, professional property and asset management. You get access to exclusive deals that typically aren't seen by the general public, and also a potential for much higher returns. Economies of scale refers to the cost advantages that arise when investment in a larger scale leads to lower per unit cost. And this is, an example of that would be lower fees and expenses for investors who pool their money together in a private real estate fund with larger assets under management. For example, a private real estate fund with $1 billion in assets under management might be able to negotiate lower fees and more favorable terms with vendors and service providers than that of an individual investor with a much smaller portfolio. Furthermore, the professional management provided by these different funds ensures that investment properties are managed efficiently, resulting in potentially higher returns for investors. In many cases, these professional management teams have access to valuable industry contacts and resources that can help improve the performance of the properties inside the fund. And all this can lead to better tenant retention, higher rental rates, and ultimately much stronger returns. Private real estate funds often provide access to much higher quality, institutional grade assets that are typically out of reach for smaller individual investors. These properties often have more stable income streams and stronger growth potential, which can really translate over into much more attractive returns for investors. Lastly, a key advantage is a diversification offered by a private real estate fund. Instead of investing in just a single property, investors in a private fund gain exposure to a portfolio of properties, spreading the risk across various different assets. This diversification can help protect investors from localized market downturns or individual property issues, and investing in a private fund's portfolio is one of the very few ways an investor can achieve this diversification instantly. When investing in a private real estate fund, it may seem obvious, but two essential details that every investor needs to pay attention to when evaluating a fund sponsor is the management team that the sponsor has employed, as well as their sponsor's track record. Guys and gals, not all sponsors are created equal, and neither are management teams. You really need to look for a strong history of successful investments and a clear investment strategy. You also need to investigate the backgrounds of the key personnel involved in the fund, their expertise in the industry, and also their history of managing similar funds. Additionally, review the fund's past performance and compare it to benchmarks such as other similar funds that are available. Also, pay attention to the things that matter to you, whether that's cash flow, maybe it's strong annualized returns, or maybe tax benefits, or maybe all the above. This will give you confidence in their ability to deliver strong returns on your investment and help you make a more informed decision. Transparent reporting in a private real estate fund involves providing regular and detailed reports to investors on the performance of the fund's underlying assets and overall financial position. This includes metrics such as occupancy rates, rental income, and expenses. A clear decision-making process, including having a well-defined investment strategy and criteria, as well as a systematic process for evaluating and selecting properties to acquire, and also establish protocols for managing risk and allocating capital. Hey guys, I hope you're enjoying the video. Please take a moment, if you are enjoying it, to like, subscribe, and share. Please leave any comments below. Let us what you'd like to see more of, and look forward to providing you more content here in the future. Now, back to the video. All these factors that I've outlined can help protect your investment and ensure that the fund operates at maximum efficiency. Another key consideration is the fund's risk management strategy. Now, examine how the fund manages risks, such as market fluctuations like we're finding ourselves in now, interest rate changes, and also economic downturns. A well-managed fund should have strategies in place to mitigate these risks and protect investors' capital. Lastly, you need to assess the fund's communication practices. Transparent and regular communication is essential to keep investors informed about the fund's performance, overall strategy, and any changes that may impact your investment. Look for funds that provide detailed and timely updates on their activities, the financial performance of the portfolio, and any significant events affecting the fund or the broader market. Understanding the fund's strategy and market focus is critical to evaluating its potential success. Different strategies carry different levels of risk, and it's essential to choose a fund that aligns with your investment goals and risk tolerance. Examine the fund's target asset classes, the property types, and also the geographic regions to ensure that it's well positioned to capitalize on opportunities. When considering a fund strategy, assess the market conditions and also the trends in the target sectors and regions. You want to look for funds that have a clear rationale for their strategy and can demonstrate a strong understanding of the market dynamics at play. This can help you gain confidence in the fund's ability to adapt to changing market conditions and capitalize on the many opportunities coming its way. Additionally, consider the fund's approach to leverage and also financing. Leverage can amplify returns, it surely can, but it can also increase risk. Ensure that the fund's leverage strategy is appropriate for your risk tolerance and also investment goals. Next, you need to investigate the fund's exit strategy and also time horizon. This is crucial in understanding when and how the fund expects to generate returns for its investors. Ensure that the fund's exit strategy aligns with your own investment objectives and also time frame. Remember how I said real estate funds defy the law of physics? Well, it's true. Opposites do not attract when it comes to fund investing. Just because you see an opportunity that looks shiny and appealing on the outside, it doesn't necessarily mean that you should go for it. You'll need to consider whether your personal investing interests align with those of the fund managers. One of the quickest ways and most effective ways to vet a fund manager's level of commitment to the success of their fund is to ensure that they, themselves, the sponsors, have a significant personal investment inside the fund. There's no better way to ensure that they are motivated to act in the best interest of all their investors. Additionally, fees are an important consideration when investing in a private real estate fund. You want to look for fee structures that align with the interests of the fund managers with those of the investors. This is going to ensure that the managers are incentivized to deliver strong returns for the benefit of all stakeholders. Evaluate the fund's management fees, the performance fees, and any other costs associated with investing in the fund. Diversification is a key aspect of private real estate fund investing. Now, by investing in a fund, what you're going to gain is exposure to a portfolio of properties, which can then help spread out the risk across various assets. And this can protect you from localized market downturns or even issues that may affect individual properties, but not necessarily affect the entire portfolio. When evaluating a fund's diversification, consider the mix of regions and investment strategies within that portfolio. A well-diversified fund will have a balanced mix of assets that can help mitigate risk and provide more stable returns over time. Wow, this is a lot of great stuff, so much so that we're going to split this video into 2 separate videos. So come on over here and follow me for video number 2. Now, before I wrap up, we want to offer you a free gift as a thank you for watching this video. In the description, you're going to find a link to our free guide on mobile home park investing, one of my favorite asset classes that we know like the back of our hands. If you've already downloaded it, consider this a reminder to dive in. Thanks for watching, and I'll see you next time.